and welcome back to Vidzik here. In the last 3 videos, we explored the balance sheet, statement of profit and loss, and the statement of changes in equity. Today, we are diving into the last of the financial statements and exploring a crucial aspect of a company's financial health, the cash flow statement. To make it even more interesting, we'll be taking a closer look at the cash flow statement of Titan Limited, one of India's leading and most renowned companies in the retail industry for financial year 2021-22. So buckle up and get ready for some financial insights. Before we jump into the details, let's quickly recap what a cash flow statement is. The cash flow statement is one of the 3 key financial statements, along with the balance sheet and the income statement, that help investors and stakeholders assess a company's financial performance and cash management. Now let's analyze the cash flow statement of Titan Limited for the latest financial year. Remember, this statement showcases the cash inflows and outflows the company experienced during that period. Alright, here's a breakdown of Titan's cash flows into 3 main categories. Number 1, operating activities. In this section, we see the cash generated or used in Titan's day-to-day business operations. It includes receipts from customers, payments to suppliers and employees, interest received, interest paid, and taxes paid. Number 2, investing activities. This section reveals the cash flows related to long-term asset acquisition and disposal. It includes cash flows from the purchase or sale of property, plant, equipment, and investments in other companies. Number 3, financing activities. This final section reflects the cash flows related to the company's capital structure and financing activities. It includes cash flows from issuing or repurchasing of shares, raising or repaying loans, and paying dividends. Now here's what these numbers mean to investors and stakeholders. Titan Limited has positive cash flows from investing activities, primarily from the sale of mutual funds, and a negative cash flow from operating activities, which is due to a large increase in inventory. The negative cash flow from financing activities comes from the dividends paid, lease liabilities, and financial costs paid off. When it comes to analyzing a cash flow statement using ratio analysis, we can calculate the current liability coverage ratio, cash flow coverage ratio, cash flow margin ratio, etc. However, Titan Limited has not calculated and shared any of these ratios in its annual report for the financial year 2021-22. As I had mentioned in my previous videos, ratios are calculated depending on the model of the business and the industry in which it operates. Some ratios may not be so important for many stakeholders. Some stakeholders may only be interested in the company's overall financial performance and may not see the value in calculating and reporting these ratios. If an organization is in a good financial position and is primarily focused on finding ways to support growth and attract investors, then cash flow ratios may not be important to monitor. Overall, Titan's cash flow statement gives us a good picture of the company's financial health and management practices, and it provides valuable insights for potential investors. And that's a wrap for today's episode and also the series, How to Read Financial Statements. We hope you enjoyed our journey into the world of financial statements and learned how to analyze one using Titan Company Limited as an example. Remember, understanding financial statements is key to making informed investment decisions. Thanks for joining us, and don't forget to like, share, and subscribe for more financial insights. Till then, have a great day.